How can I avoid a mortgage or loan disaster? And the problem with disasters is you can't really see them coming. At the end of the day, you only know you were in a disaster after enough time has passed by that you can look in the rearview mirror and say, wow, that was a train wreck. That mortgage or loan that I was getting, that was just not a pleasant experience. In fact, I was with some friends and a past client this weekend, and they were talking about how borrowing money is absolutely brutal. I mean, there are unique cases of people who think the process is just wonderful and the person they were working with was wonderful and everything just went according to plan. But the truth of it is that borrowing money isn't an exciting process. It's not fun. It's not like going on holidays. It's not like buying a new vehicle or buying a new house. You're taking on a financial burden with the expectation that it's going to get you further down the road in the long run, but today you still have to bear that burden. And so there's a couple of things that you can arm yourself with to avoid even getting into a disaster. The first thing that we would suggest to you is know how much time you're going to need to borrow money. It's very common for us in what we do with emilynow.ca and the requests that come through that people are always at the 11th hour. I need money tomorrow, I need money by the weekend, I need money by next Wednesday. And the reality is that the less time you give yourself to get a mortgage or a loan, the higher the interest rate's going to be, because the type of lender that you have to go to, they charge higher rates of interest to be able to respond quickly. So here's kind of the general rule of thumb. If you want to be able to get a mortgage from a private lender with 24 hours or 48 hours notice, you can make that happen. If you want, if you need a week to put a deal together, then maybe a mid-market lender or a traditional bank would be the option. But you really have to make sure that you understand that banks in particular, if you want the very best rate in the marketplace, then you're going to have to go to probably a larger institution. Those larger banks and lenders, they have layers of management and process and bureaucracy, and that just takes time to get through. You can't expect them to turn around quickly. So you're going to need a few weeks with a traditional bank, and if you don't have a few weeks, then you're going to end up going to a mid-market lender or a private lender and paying higher interest rates, and then maybe refinancing them with a traditional lender down the road. So know how much time you need. Know what documents and information you need. Again, some people will say, yeah, I have all the paperwork I need, and then you start to see the paperwork come in, and it comes up pretty short. Maybe they don't have the appraisal that they thought they had, or maybe you don't have the pay stubs that you thought you had, or maybe the employment letter is now a few months old and it doesn't work anymore, or the financial statements for your business, the last time you actually printed them was 6 months ago. And so make sure you know what documents you're going to need, what information has to be put together so that you can be prepared. I met with a client last week who is looking at doing a deal in the spring, and I had let him know that if he was looking to transact, that 90 days before the date he's going to want to start the process. And he was pretty keen to say, okay, well that's great, but could you send me the document checklist tomorrow so that I can get started on putting the paperwork together? Well, it's pretty easy to see that he's trying to stay clear of a disaster that might come from not being prepared and not having his information together. And then lastly, know the math. This is a common, very common disaster or criteria that leads to a disaster, where someone will say, look, I thought I could get this much money for this house, or I thought I could borrow this much money for this piece of property, or I thought our business could just go ahead and just borrow this kind of money, but they don't actually understand what the math is to be able to get that approval. They don't understand that the income, what the income required is. They don't understand either the down payment or their equity. So make sure you know the math. And here's how significant it can be. If you're employed and you have a job and you're used to getting a paycheck every 2 weeks, and now you go to the bank and you say, look, I'd like to get a mortgage for this home that I'm purchasing, and they say, how much do you make? And you tell them I make this much. Well, as they go through the process, if they end up getting your pay stubs and seeing that the amount of money you make is actually less than what you've told them, well, that can seriously change the amount of financing that you're approved for. And if you haven't given yourself enough time, you may not know how to respond quickly enough that if the lender were to drop the loan amount, where's the extra money going to come from? Or if it turns out that you just thought you made X amount of dollars and it turns out that you don't, how do you now adjust for that? Or even in a business, if a business says, yeah, we thought we had our financial house in order, and oh, we forgot that we still owed GST to the government, or we didn't record that properly in our financial statements. Well, by the time the bank starts going through the paperwork, if you don't understand the math and the implication of being right or wrong with the information you've provided, then that can change your approval. So a couple key ways to avoid a disaster: give yourself enough time, know what documents and information you need, and understand just the basic math involved in your approval so that if anything goes wrong, you know where to adjust.